Afternoon and welcome to our midday update for January 11th of 2017. This is George Papazov, trader, founder here at Trade Pro Academy, live from our trading floor. We set up a virtual trading floor and it's been a phenomenal success so far. We're trading there live, we're discussing some opportunities, and we're engaging as a group, and that's the value in a community. I want to start out today by talking about the market. We all know what the big event is of the day. We had Donald Trump's press conference. He's actually still answering questions right now about whether or not he's going to build a wall. He's sticking to the script. He's going to build a wall, and Mexico is going to pay for it. All right, no new rhetoric there. Now, you look at the last 3 days and you ask yourself, well, the market hasn't gone anywhere. What is it doing? Well, the one thing you need to realize, traders, is you're starting to get some more volatility today. If you're not trading in a volatile environment, you're scared. You have no trust in your system. This is a day you should have trades. This is a day that if you trade 3 to 5 trades on average, and today you're doing 9, you're doing 10, that's okay, as long as you're managing your risk properly. And I've done quite a few trades, not quite a few, 5 or 6. I'm waiting for good opportunities, and they're working out for me. Okay, so there's a ton of opportunity here. Why is the guy on Skype right now? Leave me alone. I just quit my Skype. How about that? That'll teach him. On the SP 500, yeah, we're consolidating. We're close to new highs. All these people out there, all these traders that are new are saying the market can't go any higher. It can't go any higher. I'll tell you what, you keep saying that and I'll keep taking your money. It can go higher, and these dips coming down and they get bought up. All right, it's by the dip. I understand that at some point there's going to have to be a reversal. I get it. I can tell you one thing, though. This month, January and February of next month and this month of 2017 will probably be the most volatile period that market's seen to start a year. There's a lot of uncertainty. There's a lot of transition from an old regime to a new one, from one that's been there for 8 years in the administration with Obama to one that is an unknown. All right, he's starting to get a little bit of consistency with the platform and agenda, but you know, I think you guys will all agree that Trump's a little bit of a wild card, just slightly, just a tad bit. So what's going to happen? We don't know. I can tell you one thing. It's great to be a trader. Ton of opportunity, especially in today's market. It stinks to be an investor right now. There's a lot of uncertainty. Oil just collapsed yesterday. Massive inventory build at 4:30 p.m. yesterday. You need to know that. Oil collapsed. All right, 4:30 p.m. That's what part of the downside was. It bottomed out. Today we had big inventory, but that was expected. All right, what's happening right now is there's ships out to sea with barrels of oil loaded on them, and these ships are coming in off the dock and being offloaded with that oil. Why? Because that doesn't count as production. If you're a country that agreed to cut production and you put all your oil onto a ship from before that you've already produced, you could sell your cargo-based oil out into the market and not have to pay for it because that's not considered production. That's what these nations are trying to do. These ships are docking, they're offloading this oil that's been floating on sea. You can get a cargo container for $6,500 a month, for goodness sake. All right, it's cheap. Look at the Baltic Dry Index, not dry ships, Baltic Dry. That thing keeps collapsing. It's at a low. That's what's happening here in the oil market. It's oversupplied. I don't think it's production cuts happening. I think 52.15 is a sell level on this midpoint. I think from here we start moving lower. 49.98 is your next support on oil. We touched that, and I'm throwing a blind bid in there. I'm buying it, closing my eyes and just buying that level with a stop below. Okay, dollar index today is rebounding. That's causing the little bit of weakness in the gold. Also, it is causing some of that weakness in markets overall. So higher dollar is not typically good. And other currencies are just slumping against the euro or the dollar. And I'll show you that right now. Let me pull up my CQG terminal here. I'm going to go in here, show you the FX markets. All right, look at this. The euro was almost a 104.80 overnight. I'm pushing those lows. It rallied out of the gate, but just up to these MACD bands. And from here, I think 105.40 to about 105.63, that's a sell zone for that euro. Above 105.60, there's stop losses back up to 106.40, 106 even. Okay, there's buy stops for sure, but we're starting to get a bit of a bottoming out here in the euro. All right, the US dollar's strong, euro was weak. That's the overnight news. Look at, for example, the pound. The pound today was at an all-time low, below 121. When you go below 121 and at below lows on a currency, that just triggers a lot of emotional selling. I missed this, let me sell more. It doesn't trigger people to buy that dip. Only the professional managers and traders do that, are able to pick a falling knife because they pick good locations, right? If you're not picking good locations, you're selling into a low and you're going to be at the mercy of the market and in danger of getting your stop taken out. This is what's happening right now. Weak sales or weak shorts that got in the market towards those are getting rinsed out and stopped. I think on GBP, we go back above 122, but I think 122 to about 123 is an offer level. All right, enough of currencies. Let's look at the energy markets. The energy complex all across the board is on fire today. Oil bottomed out, rallied up to these 52s. We knew it was going to stop right here for multiple reasons, but you could see these Bollinger Bands pinch. Previous consolidation and the midpoint of that previous consolidation offers some good resistance up top. I wouldn't be getting long right now. I'd be trying to look for some opportunities if it fades a little bit down into the 52 even structure. So 24 cents off of this. RBOB, gasoline just exploded higher. Took out this 158 top. Buy stops galore. Natty gas starting to consolidate a little bit in the triangle, but nat gas was strong yesterday while oil was weak. All right, that's the energy complex. Look at the metals. What are the metals doing? They had a massive sell-off and a rebound. They're getting volatile, but for the most part, oil's hanging around this 1188. Today in our virtual trading room or virtual trading floor, we had discussed getting long gold at about 1178. Here's kind of what I posted. Said, hey guys, some volume profile support here. That could be a good area to try to get long. I didn't get it because I can't trade everything, for goodness sake. I was busy on the S&P and following oil. All right, that's kind of what the metals market's doing. I still see some upside, but be careful. Metals market's already kind of strong, especially on gold. Gold's strong. Silver is weaker than is gold. You could see that, right? It hasn't come back as high. Gold's will come back right into its consolidation. If you're long gold, you still could have some upside, but I can tell you right now, all right, upside is limited compared to the risk of the downside. Look at it. It picked up off that bottom, but it's getting crushed. So careful if you're long gold. I can tell you it's volatility. And the biggest tip I could give you today for your trading that should help you through 2017, the first quarter, especially Q1, where volatility is going to be heavy, is this. Take your darn profit if you got it. I know the trade pros in there are probably rolling their eyes because they hear that too often. Take your stupid profit off the table. Sorry, I didn't mean to call it stupid. Profit's important. Take your darn profit off the table. Put it in your pocket. It's not a market to sit here and hope for another 30 points. It's a market that you're better off loading up on more contracts and getting 3 or 4 points because you get them with higher probability. On the route to 12, 15, 100 points comes 3 or 4 points first every time. If you're looking for a 10-point move, every time you got it, you've gotten at least 3 to 4. If you get 9 but not 10, every time you've gotten 9, you've gotten 3 or 4. But you got stopped out because you didn't get 10. But one of the biggest issues and qualms I have with traders is this concept of targets. I'm going to trade to my target, George. I'm not taking profit early. I'm trading to my target. All right, you do that. And I'm going to put my sell order right below your target to make sure it doesn't get there. And that's what other traders are doing too. Why do you think markets care about your target? Why? Why are you the impression they care about your target? They don't. Okay, guys, eliminate that target. Start getting paid quicker. Start focusing on a higher probability of win trades. If you're at 70% and upwards, great. 80% even better. Focus on that number. All right. Focus on taking consistent profits and setting up nice trading zones for yourself. That's where the money's at in this business. Consistency always trumps, and I'll get into Trump in a second. Consistency always trumps profitability because consistency will keep you in the game in the long run. Profitability could give you a wild ride in the first couple weeks and then sink and you could blow out your whole account. If you live on the edge, you might fall off. Stay far away from the edge in this business. This isn't a business to take gamble bets. If you want to bet, go to the casino. All right, rant / over. Let's move on with a few other markets that I want to show you guys. Trump started speaking at his conference at 11. He's still answering questions. You probably should be watching that at the moment instead of me. I probably should be watching it too instead of talking to you. But here I am. I'm a nice guy. What could I tell you? What he said, all right, yeah, pesos everywhere. I was about to show you the peso on XBI. One of our members here at the virtual trading room, she's very astute. She knows what she's doing and called this out in the room as it was happening. She said, XBI is tanking. Okay, well, that's because Donald Trump started talking about the pharma industry and saying these companies are making a killing. All right, it's not an efficient business for them. There's going to be changes. That scared the crap out of Biotechs. Further to that, he's repealing the Obamacare and replacing it with God knows what. Nobody knows yet. He hasn't said anything, but he's going to repeal it. He knows that. He's going to take away something without knowing what he's going to replace it with. Or he knows, but he won't tell us. Who knows, guys? I don't know this stuff. I'm not politically biased. If you want to follow politics, keep that away from the market, because politics could influence how you trade, and that's going to get you killed. Okay? Because now you're looking to be right because you have a political bias or opinion. You're looking to validate that with the market. That's going to end up tragically. All right? Anywho, the member said, hey, look, XBI is tanking. We looked at that, and there are some opportunities, and it continues to stay low. Equity markets pretty much recovered the entire sell-off. Let's look at the peso. The peso is one asset that when Trump speaks and when there's policy about Mexico and when he's talking about how it's going to impact Mexico, talking about bringing jobs to the U.S., about Ford, Toyota Motors, what that's doing is picking out of the pocket of Mexico, who's already established plants. You know, it's a bit of a dirty trick to go in there, go into their country, pay them next to nothing to build these little automobiles that they can't even afford to drive, to ship back to the U.S. and make them build all these factories, all right, pollute in their land, and then just say, peace out. We don't like it. We're going with Trump. Here's a factory, all this garbage you got to deal with. We just polluted your land, paid you nothing, and you can't even drive the cars we made. All right, but that's what's happening in Mexico. It's terrible. It's tragic. It's Trump. But on the way up, this dollar's going up. The Mexican peso is going down. The Mexican central bank spent $4 billion. $4 billion. Doing what? Buying Mexican pesos, trying to sustain this market at 21.20. They did it temporarily. What does $4 billion get you in the Forex market? It gets you 21.55 to about 21.21. 30 ticks. That's what it gets you. That costs $4 billion. Make no mistake about it. The dollar is not strong. It's the Mexican peso that's weak. That's what's leading this currency pair. What you want to do is sit here, identify support levels on the downside, and just buy it. As long as the open of the current session is trading at or above the close of the previous, you got a dip buying environment that you can just start plowing into. All right, that's the Mexican peso. That's been wild. It's been raging. It's been going on for decades, I agree. But the difference now is that they're pulling out of Mexico. They're pulling their investments out and just leaving them high out to dry. They've been doing it for decades, but at least the Mexicans have been getting paid, right? At least they've been getting paid to do this. I get it. You know what? Protectionism and saying let's bring production home is a great thing, okay? It's a great thing for a country to produce until the robots come and take over, all right? It's a good platform to get people excited. Yeah, let's bring Michigan back. Let's bring back a model that's broken and doesn't work. That's what's going on. They're going to bring jobs back. All right, what is it going to cost, however? What is the cost of these relationships? You're going to slap a tax onto the Chinese yuan and imports? Great, guess what China's going to do? They're going to devalue their currency. You want to label them a manipulator? Who cares? What, are you going to not buy from them? What are you going to produce in the U.S.? Let me ask you guys a question. For those of you that are in the chat box, maybe you could reply. Would you rather buy an iPod made in America, all right, or let's say iPhone made in America for $1,900? Or would you rather just buy a stinking iPhone for $650? All right, $1,900 made in America, US of A, $600. You don't really care where it's made. One or two. Give me an answer if you guys don't mind. Be honest here. I don't care. I'm not going to judge you by name. I really don't care. So I'll tell you something. Steven, there is no option 3. Darn it. Fine. An iPhone or an Android phone. What a smart guy. Love it. Android, whatever it might be. Press conference is over, by the way, guys. Whatever it might be, what would you rather do? The majority of consumers would rather buy a phone. Why? Because they don't have jobs. They have 2 part-time jobs working in place of a full-time jobs or 1 full-time job. The jobs report will tell you that's a good thing. You listen to that jobs report, all right? But the truth is there's more people working, more jobs getting paid less. They're going for cost savings. All right, you don't think you're going for cost savings? Go out there, start a company, and price your product 3 times what you could get it, and put a Made in America logo. Fine, you'll get a few people to buy it, but the masses will not. What I'm trying to say here is you're going to bring home protectionism. You're You're going to skyrocket your costs for those products. Consumption is going to go down. These things is a finely balanced act. You can't just come in there with one idea and change the world. Things are going to change, all right? What's China going to do? They're going to say, all right, we'll focus more on Europe, focus on Australia, New Zealand. We'll dump the price of the yuan, and you guys will have to buy our goods because your consumers are going to be chasing costs. The majority of consumers are driven and incentivized to spend and consume based on cost. Guess what? 85% of the GDP in the United States is driven on consumption. So we'll see how it plays out. This is why there's a lot of uncertainty. And while he's ran on an agenda and platform, Donald Trump, to get Americans excited, and it's good. We need change in the whole world, not just America. Everybody needs to change. Things are changing at a fast pace. I'm just worried of what they're going to deliver. And I can tell you one thing. Every trader, every institutional trader, every asset manager is concerned. The real traders are excited. I hate to say it, but I'm excited for the next 4 years because there's unknowns. Unknowns means uncertainty. Uncertainty means profit potential and volatility. If you're afraid of trading volatility, you're afraid of your strategy. You're afraid of yourself. All right? You're going on a racetrack, and asking to bring your Toyota Corolla. Can I come in with my Corolla, please? Sir, we got a Ferrari for you, part of the rental package. Nah, it's too fast. It's too fast for the racetrack. That's what you're saying. If you're saying the market's too fast, I can't trade it. All right. Any questions, comments? 600. Yeah, everyone voted for the 600. Heck, I'd take the 600. You know, and I'll tell you something. Just because a product costs more doesn't mean it's better quality. It could be marketed that way. But if it costs more, you're actually producing less. That's why you're raising the cost. Less production means less efficiencies in your production line, less money for research and development, and probably you're going to fall behind on the technology curve if you're not moving units. We're working and operating in a world that needs to be economically feasible for your product to succeed. You can't be a boutique operating as a multinational company. It ain't going to happen. All right, that rant is /over as well. There goes, market's dumping again. Great, just enough to get people along and excited, and it gets dumped. And that's what I was saying to you guys earlier, is take your profits. Look, you'll see me trade. I'll show you my trades. What I do, I got long a few. Where? Here, all right? Took 2 ticks because I'm moving a little bit more size. Sat here, I'm like, I got a webinar going, took 2 ticks. Did I buy this high because it moved in my favor and said, oh, darn, I missed it? No, I waited. Why? Because now it started to look toppy. Now everyone's getting an idea to buy. When everyone gets the idea to buy, I want to sell it to them up here at these 67s. Right now, the levels you got to watch for on your charts and the S&P 500 futures are 60 even and 68. That 8-point range is containing all the volume and volatility today. North of that, we break out. South of that, we break out. All right, that's what I got for you guys this morning. Hopefully, you've enjoyed this presentation. Did you enjoy it? Throw a yes in the box. Was it good? I get a little ranty. All right, guys, I'm going to go back to the trading room here on the live trading floor that we got going, and we're going to discuss with our members and subscribers some of these ideas and some trades. One that we took yesterday that's starting to move in our favor, but dilly-daddling a little bit. So take care. Yeah, this is economics 101 is what we focused on here, but it's good to know that. All right, it's good to know that. And I think the other key takeaway from this presentation for you guys is to take profits quickly. Get out. All right, take your trades, get paid, move on. Separate yourself from the fantasy of making millions and attach yourself to the goal of managing risk. All right, YouTube, have a wonderful afternoon. We'll give you some more insight into this. I'll give you some market internals as of 12 p.m. New York Stock Exchange volume, 310 million shares, 3% below its 3-month average. NASDAQ volume, 798 million, 11% above its 3-month average. VIX index plus 2%. NASI has been the stronger pair all day until Biotechs took a beating on the XBIs. All right, be careful out there. Trade with good risk management. If you're an investor and more longer-term bias, I would still recommend you buy some short-term downside protection. It's going to cost you some money for 30 to 60-day premium, but it'll protect your profits. If you bought and you're an investor and you're more longer-term listening to this, there's no reason you shouldn't protect your downside. You could do that by buying puts. You could join our options course, and we can teach you how to do that as well. All right, it's kind of like, insurance for your car. You don't drive your car hoping to wrap around a pole every day, knock on wood. You drive it and pay insurance for it in case something happens. That's the same idea of a put. With just a few $100, you could protect thousands of dollars of positions on a rotating 30-day basis. All right, join the options course, join the futures course if you want to see this stuff live and be on our live trading floor where we discuss trading ideas, interact, and our team participates as a unit. We're trade pros. That's what you call us. Take care. Have a wonderful afternoon, and I'll see you guys here at our midday update tomorrow. If you have any questions, email us. And I encourage you guys to check out our free trial for 14 days. You can sign up, get all of our courses, all of our education, plus this live trading room access for 14 days with no commitment. Take care. Have a great afternoon. We'll see you soon.